Welcome to the Forex trading board, where market structure meets disciplined execution. Why do 90% of traders fail? It's not a mystery, it's a math problem. And if you're an experienced trader, still searching for consistent profitability, you already know the answer isn't another indicator or a magical entry strategy. The chasm between the 10% and the 90% isn't about knowledge, it's about execution, psychology, and a fundamental misunderstanding of what trading actually is. Let's be brutally honest. The 90% fail statistic persists, not because the market is rigged, but because most approach it with a rigged mindset. You're not a beginner. You understand Fibonacci, market structure, and confluence. Your failure point, if you're in that 90%, is almost certainly downstream from your analysis. The first pillar of failure is risk mismanagement. Expert traders know that a 1-to-2 risk-to-reward ratio is just arithmetic. The psychology behind adhering to it, trade after trade, especially through a drawdown, is what separates us. The 90% break their rules. They scale into losers, turning a 1% risk into a 5% disaster. Proving they're not managing capital, they're chasing losses. This leads directly to the second pillar, ego and identity. The market doesn't care about your win streak or your analysis. The 90% tie their self-worth to being right. They refuse to take a small, predefined loss because it feels like a personal failure. They revenge trade to get back to break even, blurring their objectivity. The successful 10% have divorced their ego from their P&L. A stop loss isn't a failure. It's a transaction cost for being wrong, which you will be, often. Your edge isn't in prediction, it's in probabilistic response. Finally, there's the illusion of complexity. The 90% are perpetual students, forever seeking the next piece of information, hopping from strategy to strategy. The 10% have done the deep work to find a statistically valid edge and have the discipline to follow a boring, repetitive process. They understand that consistency is monotonous. It's not about the excitement of the win. It's about the grueling, unglamorous work of journaling, reviewing, and holding yourself accountable to a system you've stress-tested. Your strategy doesn't need to be perfect. Your discipline does. The market is a ruthless optimizer. It systematically finds every flaw in your psychology and capitalizes on it. The 90% provide the liquidity. The 10% have built not just a trading plan, but a mental framework that allows them to execute it with robotic consistency, knowing that their edge plays out over hundreds of trades, not the next 5. Stop looking for a better strategy. Start auditing your discipline. If this resonated with you, then you're already ahead of the curve. Smash that like button. Helps the algorithm share this with other serious traders. Subscribe and hit the notification bell, because next week, we're deconstructing advanced liquidity grabs and their role in your execution model. Your turn. What's the one psychological hurdle you're currently battling? Drop it in the comments below. Let's get a real discussion going for those in the trenches. Until next time, trade consciously, manage ruthlessly. This is Forex Trading Board, out.